Hi, I'm Alok Agarwal. I head the quants team here at Alchemy Capital Management and also manage equity strategies. Today I'm here to talk about one of our quant funds, Alchemy Smart Alpha 250. This is a unique fund because it's a blend of quant and active. Our study of multiple equity strategies in the past have shown that the biggest advantage of active management is the acquired and accumulated knowledge and wisdom about companies' managements and qualities, which cannot be coded objectively. At the same time, the biggest disadvantage is the development of human biases that stops us from recognizing trends early on. What we tend to do is we remove these human biases by introduction of quants, and we retain the biggest advantage with some kind of active involvement where we do the qualitative rating. That's where this blend makes it extremely unique. At the next step, we have chosen with the large and mid caps in this category to go ahead with our fund, which represent close to 80% of India's market cap. The large caps, which are typically the top 100 companies by market cap, more importantly, these companies have been in existence for a long time and have seen multiple business cycles and have come out virtuous from there. Hence, they are strong and resilient, and they provide the much needed stability in the portfolio. The mid-cap companies are the next 150 companies by market cap, and by the nature of their size as well as their existence in the past, they have this ability to grow at a much faster pace, and hence they provide the potential for higher growth in the portfolio. That's why with this blend, we ensure that we have both stability as well as potential for higher growth in our product. Then comes what is the exact framework that we are following. Our unique framework is eQGP. Our framework assesses the strength of the market on one hand and the strength of individual companies on the other, and then creates a portfolio which is suitable for that level of strength in the market. The ability of our framework to put stress on relevant factors based on the strength of the market is the one that is creating the most differentiating factor. The E stands for environment, wherein we assess the strength of the market. The objective is to find out whether we are towards the risk-on environment or towards risk-off environment. A host of factors are analyzed. Some of them include the liquidity in the market, the interest rate levels and the direction, the macro growth levels, the macro balance sheet strength, and multiple more. The strength of the company is analyzed from three different angles. The strength in the quality of the company, the strength of the earnings growth, the strength of the price action. In terms of quality of the company, we look at multiple factors, especially looking at the capital efficiency side, like the ROEs, the ability to generate cash flows and historical track record around that, and more importantly, the quality of the management, which is more of a subjective call. The strength of the company's earnings growth is analyzed by analyzing again multiple factors, including profit growth compared to its own past, compared to its peers, and compared to the overall market. Not just profit growth, even the business growth is analyzed. The operating efficiency in terms of operating margins are analyzed, and at the same time whether the company is gaining market share or not. More factors are analyzed to ensure that we come across at a score which provides us an insight into the strength of the company's growth. Then we come to the strength of the company's price action. Here the analysis is done both for absolute price action as well as relative price action. For more than that, we also look at the ownership trends, whether the promoters are buying or selling, whether the FIs are buying or selling, whether the domestic institutions are buying or selling. At the same time, whether there are more pledges there or not, and what's the liquidity level of that stock in the market. Again, here also more factors are analyzed. We discussed few examples to give you a flavor of the factors discussed. As I was discussing earlier, the uniqueness of this product comes from the fact that it can apply different weightages, stress on different factors based on the level of strength in the market. In a risk-on environment, if I were to compare it with an analogy of cricket, a risk-on environment is like a full toss which needs to be hit for a 4 or a 6. A risk-off environment is like a Yorker where you need to save your wicket. As in cricket, in a risk-on environment, you need to focus more on price action, then on growth, then on quality. In a risk-off environment where you need to save your wicket like a Yorker, there you need to focus more on quality, then on growth, then on price. We have used exactly the same logic and analogy, and higher risk-on strength score for the market means higher weightages for price action, then growth, and then quality. The reverse is true for risk-off. As a result, the score of E gives us the weightages for Q, G, and P, and thereby we come to a composite score for each company. The top 25 companies with the highest composite score make their way to the portfolio, which is rebalanced on a periodic basis. I must also highlight that the portfolio is benchmark agnostic when it comes to stock weightages or sector weightages. We do not have any limit for overweight or underweight at the sector level. Our backtesting results have been compelling, and the real-life experience have also been encouraging. In case you want to know further details about our product, Alchemy Smart Alpha 250, please reach out to our team. Thank you so much for your time.